Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. This is going to be the final weekly Forex Forecast of 2021. Since next Saturday is Christmas and the following Saturday is New Year's Day. So we will be back with more content on the 8th of January. And so there won't be any new content posted until the 8th of January when we start again for 2022. So because of that, for those of you who are doing the course, we've got quite a lot of feedback from you asking if we can re-upload the course to the new website. As of next week, we will upload the full trading course to the website. So for those of you who want to go through the course over Christmas, you can. And all 100 videos should be up on the new website by the end of next week. So with that said, let's jump into today's video, and we're going to start with a quick review of key events heading into next week. And primarily here, it's the data that came out last week. We're going to look at some of the data points as we do not really have much economic data over the next 2 weeks over the Christmas period. We're then going to do our relative currency analysis, and we're going to look at the scorecards for this week, which are very interesting and they paint a picture going into 2022. We're going to then do the individual currency analysis, looking at the futures markets before going on to the currency pairs, setting up the best and with the highest probability of moving in the given direction next week. And we're going to finish, as we always do, with stocks, gold, silver, and Bitcoin. Okay, so let's have a quick look at the economic data which came out last week. There was a lot of data. We just need to look at the key pieces of data. We don't need to go through all of it. The first being FOMC last Wednesday. We saw the markets kind of correcting, doing nothing into FOMC. And in fact, even after FOMC, they kind of did nothing. And we had a fairly hawkish meeting from the Fed. They doubled their taper, or the rate of their tapering, and they also signaled 3 interest rate rises next year. Now, the reason the market didn't rally was because A, this was somewhat priced in. They also gave a bit of a dovish tilt when talking about full employment. But the fact is, they did double their rate of tapering. And overall, the result of last Wednesday's statement should be seen as bullish for the dollar, fundamentally. We also had New Zealand GDP data. This came out better than forecast, but it actually contracted from 2.4% to minus 3.7%. Now, this is important because if we compare this, for example, to the Australian employment data that came out, the Australian employment data was very strong. We saw beats in the employment change, and also the unemployment rate dropped from 5.2 previously to 4.6, which was better than the forecasted 5%. So what does this mean? Well, when we're looking at the Australian dollar and the New Zealand dollar, we would want to take a more fundamentally bearish view on the New Zealand dollar. Why? Because central banks, monetary authorities are going to want to maintain loose monetary policy conditions, i.e. devaluations of the currency, when the domestic economic data is not good. They want to stimulate GDP, for example, in New Zealand. And once the economic data starts to outperform, that's when you can see them start to raise rates, and you can see a more hawkish tone coming out of the central banks and the monetary authorities. So the second thing after FOMC last week to pay attention to is the economic data out of New Zealand and Australia, one which is outperforming and one which is still lagging. And this would give us a bearish fundamental bias on the New Zealand dollar overall compared to the Australian dollar. So something to think about going into next week. And finally, to finish off the week, we had the UK interest rate decision. We had a few others, but they kind of passed uneventfully. The UK interest rate decision saw the Bank of England raising interest rates from 0.1% to 0.25%. And if you go and have a look also at the data from last week, you can see that we had CPI year on year coming out at 5.1, which is higher than the expected 4.8, up from 4.2. So what you're seeing here is a raising of interest rates of 0.15%. It really is not a significant raising of rates. It's not going to control this rise in inflation that we're seeing in the UK. What it looks to be is more of a token gesture by the Bank of England to say, hey, look, we're doing something to actually combat this rising inflation, but without raising rates in any meaningful way that it's going to affect the economy. Because when you look previously in videos we've looked at UK economic data, it is not currently doing very well. And they want to, on the one hand, maintain loose monetary policy conditions, low interest rates, etc., to stimulate growth. But they also want to be seen to be doing something to prevent inflation from spiraling out of control. So from what we saw last week, this was a bit of a token gesture, in my opinion, from the Bank of England. And this is why when we go and look at the charts, we saw the pound pop and then we saw it come back down. So those were the main takeaways from last week in terms of the economic data. And those are the key things that we want to think about in terms of the fundamentals heading into next week. Okay, so let's look at the scorecards heading into next week. And the very interesting thing which jumps out straight away is you can see the neutrality in the Forex markets overall, compared to the last 3 months where we've always had one or two currencies outperforming, underperforming, and we've always been able to identify that and run with the best short or the best long. And ideally, we've been looking at as well the best long versus the best short, and that's where we've been getting the best moves. But look post FOMC at just how undecided the currency complex is and how corrective it is. So coming into the end of the year, you've got all kinds of different things in play. You've got the fact that the market's kind of got neutral going into FOMC and we didn't get any clear direction from FOMC. You've got traders and investors wanting to protect their yearly profits. And of course, we've got holiday periods coming up as well where you get a general lack of volatility anyway. So the first thing to take away is that going into next week, the markets are overall quite corrective. And when the markets are like this, compared to what we've been looking at in the previous 3 or 4 months, when you get these kind of outright biases on the currencies, this is where it's much easier to make money. And when you kind of get the currencies getting corrective, you want to reduce your risk. You can still trade, but you just don't want to be trading as much. You don't want to be taking too many trades. And certainly, I would be focused on taking only the best trades next week. Maybe just a couple of trades in the Forex complex which look to be the best. And we'll talk about which ones I think are most likely to be that heading into next week. So the first thing to note is the neutrality. For the first time, I think, since we started doing the longer format, we can see total neutrality really in the Forex markets with no overall bullish or bearish currencies. But the second thing to note, which is also important, is how the currencies themselves are congregating. And in this case, you can see we have now, for the first time in a while, we have the risk off currencies sitting all one after another at the top, followed by neutral Canadian dollar, and then we have the risk on currencies all the way down the bottom. And this is the Forex complex pointing towards deflation. And when you pair this with what we've been looking at in stocks, and we're going to look at in today's video, this does paint a risk off view heading into 2022. And so what is risk off? Well, it's bearish for stocks, and at the same time, it's bearish for the commodity currencies and the pound, and you're going to also see the risk off currencies like the dollar, like the yen, like the franc outperforming in a deflationary environment. And when we go through the charts in a moment, I'm also going to show you 3 key risk on, risk off charts, which all seem to be pointing towards potential deflationary scenario going into 2022 as well. So going into this week then, the key summary here is that the markets are corrective. And so how do we look to trade this? Well, I would look back to what we saw last week and the fact that the weakest currencies, the pound, the New Zealand, and the strongest currencies, the franc and the yen, they were moving to the downside in terms of the pound New Zealand, moving to the upside in terms of franc and yen, and then the markets got corrective. So I would prefer to trade in the direction of the previous moves and viewing this almost like, think of this like a bull flag, where the market rallies, these currencies have strength, and then they get corrective. You want to be going overall in terms of probabilities in the direction of the initial rally, in the direction of the initial moves here. So I do still like the Swiss franc, the Japanese yen, and the US dollar to the upside as the best plays. And to the downside, I like the British pound and the New Zealand dollar. And for reasons just discussed when looking at the economic data, yes, we had a raise of interest rates, but it looks like a token raise. And I would not be surprised to see the pound starting to decline now as traders and investors come to view that small rise in interest rate as pretty insignificant, and that there is unlikely to be any significant raising of rates until UK economic data picks up, which it has not yet. And second to the downside, the New Zealand dollar, which we looked at, we had that contraction in GDP quarter on quarter. This is going to force the Reserve Bank of New Zealand to continue to enact policies to devalue the New Zealand dollar to try and stimulate economic growth. So heading into next week, with a fairly neutral currency complex, I do favour pound shorts to the downside. So pound franc, pound yen, pound dollar once again. I do like New Zealand franc, New Zealand yen, and New Zealand dollar once again as well. We can also look at euro dollar, euro franc, euro yen I will look at next week. And we can also look at Aussie franc, Aussie yen, Aussie dollar. But in a week where the currency complex is fairly neutral and we can differentiate between, say, Australian data and New Zealand data, I do favour New Zealand and the pound as the best shorts heading into next week. Okay, so looking at the individual currencies, starting with the dollar index, and we're going to be looking on the daily chart just so we can get an understanding of what each currency is doing. We don't want to go too far into the currency on the lower time frames and miss the bigger picture. We can see here that the DXY, I have been bullish on the DXY over the last couple of weeks, and in fact I've been bullish on the DXY for the last couple of months, but we started to correct and we pretty much went nowhere for basically 2 trading weeks. You can see that we are pretty much back to where we were on the 24th of November, so even longer in fact. And we have, at the end of last week, we had a little bit of a whipsaw on FOMC and we started to rally up towards new highs. I do think we make new highs going into next week. And so the price action I'm seeing here really is confirming that view that the dollar is neutral, but it is bullish to neutral. On the euro, we have basically the opposite of what we just looked at. This to me, although it's neutral, and we look at the euro as being bearish to neutral, this to me does not look like a reversal pattern. This to me looks like a continued correction for further declines in a downtrend and in a bear flag. So I do expect the euro to start to decline further, especially as the US dollar continues to rise. Next we have the pound. Again, we came down in the pound and we popped on the interest rate decision, and I think we start to come lower now, as I said before, as trading investors start to look at that rate rise as almost like a token rise. It's insignificant, and that no real significant rate rise is going to come out of the UK until the economic data picks up. So I see the pound declining further, and I am bearish going into next week on the British pound still. Next is the Swiss franc. The Swiss franc it's actually kind of choppy. You can see here it's kind of neutral, but what it looks to be doing is it looks to be basing here with an inverse head and shoulders. That would be confirmed on a break above this level, which is the next target at the 1.1014. So again, the Swiss franc is neutral, but it's slightly bullish to neutral, especially when compared to some of the other currencies like the euro, like the pound, which are just in a downtrend and just showing bear flag type setups. The Japanese yen is also showing a potential bottoming pattern here with an inverse head and shoulders. That would come on a confirmed break above this high. And it is also showing that, yes, the Japanese yen, again, is neutral. I mean, look at this. This is like a bull flag type pattern. We have the momentum, then we start to correct for maybe 10 days. So I am still bullish on the Japanese yen, especially when you compare this to the other currencies we've looked at. Next is the Canadian dollar. Now, the Canadian dollar came down, took out the target set last week. In last week's video, the Canadian dollar scored a 2 out of 4 rating to the strong side. And when we looked at this and we went to the futures market, I said to you this is probably an illusion based on what we're looking at in the individual currencies, and that although the Canadian dollar was relatively stronger than some of the other currencies, it was not a go out and buy Canadian dollar signal. It was basically, if you're going to short something, just don't short the Canadian dollar, short the Aussie or short the New Zealand instead. And we ended up with further declines to the downside in the Canadian dollar. We are actually bearish near term, but we're trading into key levels of support here. And when we look at the relative scorecard analysis, it's completely neutral. So I have no interest really in the Canadian dollar, in all honesty, next week. I would like to see this either breaking down below the lows with momentum and turning bearish, or if we start to get a bounce and maybe a reversal to the upside in the Canadian dollar, I would like to come back into the Canadian dollar then. When it's absolutely neutral currency and it's showing 0 in the relative scores, I have very little interest in trading that currency until it starts to move again. Next, we have the Australian dollar. Now, the Australian dollar is also still in a downtrend, and we looked at the economic data last week, the employment data, and it was actually pretty good out of Australia. So in terms of the Australian dollar or the New Zealand dollar, I prefer, as I said, New Zealand dollar shorts next week. However, you can see here that this is still very bearish, and the risk remains overall in the Australian dollar for further declines. We are correcting, maybe we could even come a little bit higher with the correction, but overall I remain bearish on the Australian dollar. And finally, the New Zealand dollar, we did come and take out the target set last week, and although we are starting to lack a bit of momentum down here at the lows, I do think the New Zealand dollar, especially with that GDP contraction last week, is one of the better shorts heading into next week. So unlike last week where the individual currencies, we had the CAD kind of contradicting what we saw in the scoring system, going into this week everything seems to be aligning up, and there doesn't seem to be any hidden pieces of information we need to pay attention to when assessing the individual currencies here. Okay, so dropping down to the 4-hour chart and looking at the markets themselves heading into next week, starting with crude oil. Crude oil has been quite choppy, just like a number of the markets, and the reason for this is because we had such a big sell-off that when you have big momentum coming into the market, you start to get profit taking coming in, the markets get corrective. So the market moves, then it pauses, then it moves, then it pauses, and we've had a pause. I am still bearish on crude oil, and when you look at the Canadian dollar, it does look like the risk is weighted to the downside, even though it's ranking at the moment as completely neutral, as zero. So any pullback in crude oil is still viewed as an opportunity to look for short positions for a new low down to the 62.23. I have to be honest, it's not one of my favorite markets going into next week, because if we zoom out in crude oil, you can see that the previous low down here, the trend is actually to the upside, and this is, as it stands, a deep correction. We haven't broken the low yet, and anytime you get involved in shorts here, for example, there is a higher risk of reversal. But based on everything we're looking at, I am still bearish on crude oil on balance. We do not need to use this in terms of the Canadian dollar as much next week, because I don't have any CAD positions that I'm looking at or interested in next week. Next is pound franc. So pound franc is one of my favorite setups going into next week. Once again, we had the interest rate decision and a spike, and look at this rejection to the downside. This was a failed breakout as it stands to the upside, and going into next week, I do think we see further declines in pound franc, and I am looking for the 1.2053. We may start to correct a little bit at the start of the week, but any pullback in this area is simply viewed as an opportunity to look for bearish setups into the 1.2053, which is what we were looking at last week. So pound franc, one of my favorite setups going into next week. I think it's one of the highest probability markets. Next is pound yen. Pound yen also was rejected from the high, got volatile on the interest rate decision. There's been no major reversals here, and we've started to come down. You can see the previous low down here in the 4 hours is here. So what I'll be looking for in pound yen next week is any continued sell-off taking out this low. Look for a bounce to the upside, and this is going to start to set up a kind of head and shoulder. This is a bit of a stretch over here, but it would be more like this as a head and shoulders reversal to the downside. That's what I'll be looking for next week in pound yen. Look for this to flag, to pull back, and to fail to make new highs, and that would be the opportunity to look for shorts into the 14816. I reiterate that next week is not a week to go crazy in terms of risk, but pound yen does look like one of the better opportunities in my opinion next week. And finally, we have pound dollar. Pound dollar started to decline to the downside, and I would be looking for further declines next week. So any pullback in pound dollar is viewed as an opportunity to look for potential bearish reversals into the 1.3080. Although on balance, I think I do prefer pound franc and pound yen heading into next week. Next is New Zealand franc. Now, between the New Zealand and the pound, it's hard to decide which one is my favorite. I think I might even prefer the New Zealand, although it's ranked second here. And that's just because of the GDP data we had out last week. It's going to weigh on the New Zealand dollar to the downside, and you can see we've already started what looks like here a wave one from the high. So A, B, C, and then you get this wave one correction and then down into the target at the 0.6140. So absolutely next week, any pullback in New Zealand franc will be viewed as an opportunity to look for bearish reversals in this market. And the 0.6140 is a high conviction target of mine. I think the probabilities that we come down to this are around 70%, if not more. Next is New Zealand yen. New Zealand yen is a very similar setup to New Zealand franc. Again, I have a high conviction target at the 74.83, and that contraction in GDP last week out of New Zealand just adds to the probability that we're going to come down to these levels in these markets. So again, it looks to me like we had an ABC correction last week. We rejected from the high and we're starting to break the low. So any pullback in this market next week is looking like one of the best opportunities to look for short positions into the 74.83 in this market. So going into next week, my four favorite pairs are pound franc to the downside, pound yen to the downside, New Zealand franc to the downside, and New Zealand yen to the downside. Next is New Zealand dollar. We have started to sell off in New Zealand dollar, and I am looking for further declines as the higher probability. Any pullback in this market, and perhaps we take out the low first like this, and this becomes a near-term wave one. We pull back, and then we get the opportunity to look for shorts into the 0.6725. So I will be keeping my eye on this, but I prefer New Zealand franc and New Zealand yen. Next are the euro pairs with euro franc. Now, euro franc is still trending to the downside. We were looking for moves last week into the 312, sorry. And again, very similar to the other markets, we've just had a near-term correction and we're starting to continue in the direction of the targets that we had previously. We've just broken a double top reversal here. So any pullback in euro franc next week would be viewed as an opportunity to look for bearish setups into the target set from last week and even the week before, I think, at 1.0312. Next is euro yen. Euro yen is a market we're looking for to the downside, and we came very close to the target set last week in euro yen. And for anybody who was not involved in euro yen from up in this area, we are coming a bit close to the target now to get involved with shorts. So what I would need to see is in this market, I would need to see a pullback and a potential head and shoulders like this. And then in this area, this would be a second opportunity to look to get in down to the 127.31. But if we come down, take out this target first and then bounce, I'll be looking down towards target 2 at the 126.410. So definitely a market I'll be keeping my eye on, but I do prefer, as I said, these two here, pound franc, pound yen, New Zealand franc, New Zealand yen primarily. Next is euro dollar. Now euro dollar with the DXY continuing to rise to the upside. Again, this just is a near-term correction and we've started to sell off already at the end of last week. I am looking for further declines in this market, so any pullback in this market is viewed next week as an opportunity to look for shorts into the target set previously at the 1.1146. And finally, we have the Aussie pairs here. We're going to look, here are the three major risk on currencies, so they can give you a view of the markets overall being risk on, risk off. We're going to finish with these. But if we start with Aussie franc, you can see we had a big bounce to the upside. Now, the one thing I will say about this is, yes, the New Zealand pairs seem to be better because of the economic data that came out vis-a-vis the Australian data that came out, but I am still bearish on Aussie franc. And in one sense, I am looking at the Aussie pairs as potentially even better setups in one sense, because yes, we had a stronger Aussie, but this also gives us a deeper correction. So if the Australian dollar starts to come down and we break the lows here and we bounce and we get this kind of head and shoulders, yes, the New Zealand dollar might sell off harder, but we may actually get a good opportunity in this area for, first of all, down to the previous lows and then to the 0.6372. So although we had good data out of Australia, don't forget the RBA have stated recently that interest rates are going to have to remain low for an extended period of time. So we've got the good data coming out of Australia, but we haven't yet had any pivot from the central bank. And I think at least we should be coming down to make one more low and potentially into the 0.6372. This to me is a fairly high probability move if we can start to break down next week. Because of the distance, maybe it takes 2 weeks, but you get my point. I do like Aussie franc for further declines. Next is Aussie dollar. Now I do like Aussie yen over Aussie dollar, but I've put it down here because these are the three risk on, risk off currencies I want to finish with. The Australian dollar has started to correct, and I mean, if you just, I don't like trend lines. You guys know I don't really like trend lines, but you can see just by putting this on here that this is a correction. It looks like we're going to start to break down. What I would prefer to look at is the horizontal levels here, because they represent price points all across the chart. You can see that if we start to break down below these levels here, we're going to have arguably a double top, or if you want to, you could call it a head and shoulders. It doesn't really matter. The point is we have a potential reversal pattern here, and that would be the opportunity that I would look to down towards the previous low if you want to be conservative, and then on to the 0.6933. So I like Aussie dollar to the downside as well. And finally here we have Aussie yen, which is the first of the three risk on, risk off currencies. You can see again, looks like we have a near-term correction, and I'd be looking for this to develop into a head and shoulders. We come down, we bounce, we fail to make a new high over here, and then this becomes the opportunity in this area to start to look for a sell-off into the 79.97. This to me is a fairly high probability target. And based on everything I'm seeing here, I do think we come down to the 79.97 over the next couple of weeks. Now, what I want to do is I want to come out on the daily chart and I want to show you something in terms of these three risk on, risk off currencies. The first, of course, as I said, being Aussie yen. Why? Because the Australian dollar is the most risk on currency and the Japanese yen is the most risk off currency. And if we scroll out here, you can see we have the makings of a potential major double top in Aussie yen that would be confirmed on a break below this level. So if we come down to the 79.97 and then continue to break this, this would actually confirm a major top in Aussie yen, and that would be signaling heading into 2022 quite a significant risk off environment. Now, if we go down to euro pound, and I'm not looking at euro pound and US dollar yen this week for short-term trades, because both the euro and the pound are weak, and both the US dollar and the Japanese yen are quite strong. And if we click on euro pound, you can see, first of all, before we look at the risk on, risk off aspect of this, you can see, look how choppy euro pound has been. We have left euro pound off of the watch list for, I don't even remember the last time we traded it, and look at the headache we saved ourselves by identifying only the strong versus weak and filtering out currencies which are, in this case, 2 weak currencies. Look at this just continued correction. There was no opportunity really in this currency pair all the way back from the 26th of March. This currency pair has hardly gone anywhere. And what we're starting to see here, and the reason why I'm showing you this as the second big risk on, risk off currency, is because in risk off environments, you tend to see the euro, as you can see down here in the crash of February 2020, the euro outperforms the pound. And we're now sitting at a point where we are potentially developing an inverse head and shoulders in the euro vis-a-vis the pound, and that would be confirmed on a break above here. And it also looks like we're getting this at the end of a 5th wave. So like this, 1, 2, 3, 4, and then you have this kind of almost ending diagonal. See how it gets very, very choppy, very, very choppy. We lack momentum, and these kind of markets can actually explode to the upside. If that were to happen, that would be signaling a deflationary environment and a risk-off environment, not just for currencies, but for stocks as well. So after the major double top in Aussie Yen, Euro Pound is also suggesting that a risk-off environment across the board could be coming in 2022. And if you look at this here as 1, 2, 3, 4, and then a choppy ending diagonal 5th wave, you might say to yourself, well, isn't that going to be a pullback and a continuation? Well, if you look at it from the previous rally, here is your high, and this looks like A, B, and then this is 5 waves of a C wave. So it does look like we could get a break high in Euro Pound. If that's to happen, maybe the euro turns strong and we can start to look at Euro Pound once again. For the time being, I would leave this. I don't want to get involved in a market this choppy, but I'm showing you this as it paints a picture heading into 2022. And finally, we have US dollar yen, which of course is known as the risk on, risk off currency. In a risk on environment, you see the US dollar yen rising against the Japanese yen. And in a risk off environment, you see the US dollar declining against the Japanese yen. And right at the top here, again, we haven't been looking at US dollar yen because they've both been strong currencies. And again, look at the headache we saved ourselves going back to the end of September. Choppy market, 2 strong currencies, choppy market, no opportunity. But what is now apparent is we are setting up a potential inverse head and shoulders. And if we come down and break this level, this is going to be potentially the start of a 3rd wave to the downside. And a 3rd wave to the downside in US dollar Japanese yen would be signaling risk off, and it would be confirmation of a deflationary environment heading into 2022. So to summarize, my favorite pairs heading into next week are pound franc, pound yen, New Zealand franc, New Zealand yen. I also quite like Aussie yen and Aussie dollar, Aussie franc, perhaps even pound dollar, New Zealand dollar. But the franc and the yen pairs stand out to me as being the best opportunities, especially New Zealand yen and New Zealand franc are probably my favorite heading into next week. And although I'm not looking to trade Euro Pound and US dollar yen next week, I've added these in with the Australian dollar, Japanese yen to show you in the bigger picture heading into 2022, we could be facing a risk-off environment here. At least that's what the currency complex is suggesting. So keep an eye on US dollar yen, Euro Pound and Aussie yen for those major reversals to see if they come heading into 2022. Okay, so wrapping up the video with stocks, gold, silver and Bitcoin. Now, in the stock market, not too much really happened last week. We just kind of moved sideways. We opened over in this area and we basically finished exactly where we opened. Now, the takeaway from last week is that we had a rally to the upside in SPX. We took out what can be considered a left shoulder here of a potential head and shoulders, and we really failed to rally through the reversal point to make new highs. That was concerning for me at the end of last week, and the problem we now face is overall, because we went into last week kind of neutral on stocks because of where we were sitting, this kind of potential right shoulder. When you're in this area, you can break higher to continue trend, or you can come down. So it's kind of a neutral pattern. However, with the failure to rally higher and take out new highs and to start to come down and break lows in this area, paired with everything we're looking at in the Forex complex, my bias is currently weighted to the downside in stocks. And I think going long, especially the indices right now, is a bit of a risky move. To get long in stocks fully once again, I would like to see the stock market rallying and breaking new highs, and this overall correction here, if this is going to be a correction, to break out like this and then to start to see the market doing something like this and continuing up. Now, based on what we looked at in the currency complex, I'm not sure that's actually going to happen, and I would be very, very careful going into next week in terms of stock. So to cut a long story short, my bias in SPX is still to the downside, and any pullback in this area should be viewed as a potential opportunity to look further declines into the 4476.44. And if we start to get this sell-off in the stock market and we start to get a flight to safety, what are we going to see? We're going to see euro pound break into the upside, we're going to see US dollar yen break into the downside, and we're going to see Aussie yen coming to the downside as well. Exactly what we looked at with those potential major breakouts in the risk on risk off pairs. Next is the Nasdaq. Now, when we broke up in SPX, we failed to go anywhere in the Nasdaq, and the Nasdaq is continuing to decline to the target set. So as it currently stands, any correction in the Nasdaq is viewed as an opportunity to look further declines into the 15499.26. Next is the Dow Jones. Now, the Dow Jones, like the SPX, also started to try and make new highs. However, it immediately reversed, and the previous trend is actually here. This is, as it stands, considered a deeper pullback now in this overall move down. So any pullback in the Dow Jones would be setting up a potential head and shoulders here, and any pullback as it stands, unless we start to break above the 36273 with momentum, we break up like this and we start to make new highs and then correct, that would be the opportunity to start to get bullish once again in stocks. But next week, any pullback in this area should be viewed as a potential opportunity to look further declines down to the previous low and overall into the next target to the downside at the 33769.09. Next is the Russell. Now, the Russell, which is the most sensitive of the indices to the business cycle because of its composition of small cap stocks, you can see as SPX, as the Dow Jones, they were attempting to rally to new highs, the Russell was actually making new lows, and any pullback next week should be viewed as an opportunity for further declines into the target set at the 2107.08. And finally, we have the Nifty. Now, the Nifty is actually structured to the upside, but based on everything I'm seeing and the fact that the Forex complex is pointing towards deflation, the fact that risk on, risk off currencies are at risk of major breakouts in a risk off direction, I would be personally wary about buying the Nifty, as yes, it is currently structured to the upside, but as you can see, and as we discussed last week, in fact, there is no break here with momentum. What we would really want to see is similar to how we had a correction over here, and then we broke above with momentum, we correct, we continue, we correct, we continue, we correct, we continue. So we don't really see that here, we just see a break higher. And if you wanted to get bullish in the Nifty once again, I would wait for it to come up and break the previous high like this, and if you start to break here with momentum, then we can look for pullbacks and a continuation up. As it stands, I would go into next week neutral on the Nifty, and I would not be surprised, in fact, to see this reverse once again to the downside. So caution advised on the Nifty. I wouldn't want to be long the Nifty personally heading into next week. Finishing off with gold, silver, and Bitcoin. Now, what's interesting about gold is look at this double bottom breakout with momentum last week, and we have strong momentum to the upside. This does suggest further advances to the upside in gold, and it looks like we might even be coming back for, although this could be considered a double bottom, may be coming back here and could also be considered an inverse head and shoulders. So any pullback in gold would be viewed as an opportunity to look for bullish setups into the 1842.97. Now, personally, I like to have confirmation from the dollar when trading gold. We saw the big gold breakout and the dollar remained strong, and what happened? Gold ended up failing. So what I'll be looking for going into next week is, if we see in the dollar we've been correcting like this, perhaps we come up, make a new high, and as we do that, gold pulls back, and then you start to see a double top in the DXY. That would be when you would start to break out to the upside in gold here, and that would be the opportunity to pivot, if you see this kind of reversal in the DXY, to a long opportunity in gold. If the dollar just starts to break higher with momentum and it continues to break up like this and make new highs, I would be a little bit wary of this breakout to the upside in gold, just because, as we've seen in the past, when gold rallies, if the dollar doesn't sell off, the dollar can actually break that rally and you can see gold selling off again. So very interesting, as gold can oftentimes lead the dollar, not always as we saw over here, but it can lead the dollar and it can be an early sign of a reversal in the dollar. And on top of everything else we discussed today, what is this also potentially suggesting? It's suggesting we could be seeing a bit of a flight to safety. So just as the charts we looked at in the Forex complex are also suggesting. So gold is interesting heading into next week, but I'd really like to see the dollar selling off first. And it's also one of the reasons I prioritize the Swiss franc and the Japanese yen over the US dollar next week. Next is silver. Now last week we were looking further declines to the downside in silver. We came and took out the target set at the 21.52, and that was the low of the week more or less in silver. So heading into this week, silver is actually bullish, but again, just like with gold, I would prefer to see the dollar starting to reverse, maybe hitting a double top and reversing like this first, and then as we get the test of the high, silver pulls back, we get this inverse head and shoulders, and then as the DXY, if it does get rejected from the high and reverses, then we start to see a breakout to the upside in silver, and that would be the opportunity to look for further advances to the 22.91. And if we can break through here in silver, we're going to be looking up towards target 2, 24.16. And last but not least, we have Bitcoin. I have been bearish on Bitcoin for a while now, and we had this big sell off to the downside, almost a flash crash. And again, just like I said earlier, when you have these sharp moves, the markets tend to pause or correct after that. So although we've had a lack of volatility since this flash crash, I am still bearish on Bitcoin, and any pullback is still viewed as an opportunity to further declines down to the low, first and foremost, and then on to the 39,630. So that is it for me for this week, guys, and not just this week, but also for the year. It's been a fantastic trading year, and the last 3 and 4 months, especially in the Forex markets, have been fantastic. Just week after week, those strongest versus weakest currencies have really been rallying. Over the last couple of weeks, they've kind of gone a bit sideways into the end of the year, but it's been a phenomenal run ever since we started doing the longer format here of the weekly Forex forecast. I want to wish every single one of you a fantastic weekend. For those of you celebrating, I want to wish you a Merry Christmas. And to every single person watching this video, I want to wish you a Happy New Year. I will be back on January the 8th with a new weekly Forex forecast, the first of 2022. And I can't wait to get started with a fresh new trading year with all of you. A huge thank you to everybody who has subscribed to the channel this year, and a huge thank you for everybody who's been commenting on a regular basis on this channel, and for the regular viewers of this channel. I appreciate all of you. So as always, if you enjoyed this video, please let me know by liking, sharing, and subscribing. Have a great weekend, have a fantastic new year, and I will see you all in 2022. Bye for now.